Departmental accounts. Departmental accounting is a system of accounting under which the accounts of a business are kept department-wise. When a business consists of a number of departments or sections, it is essential to know the performance and results of each department separately. Departmental accounts are prepared to measure the profitability and efficiency of each department and to help the management in decision-making. Examples: large retail stores with separate departments for clothing, footwear, electronics. Objectives of departmental accounts: 1. To ascertain the profitability of each department. 2. To compare the performance of different departments. 3. To provide information for managerial decision-making. 4. To identify weak or loss-making departments. 5. To exercise control over costs and improve efficiency. Methods of maintaining departmental accounts. There are two main methods of preparing departmental accounts. 1. Separate set of books. Each department maintains its own books of accounts. Separate trial balance and final accounts are prepared for each department. This method is suitable for large-scale organizations but is costly and time-consuming. 2. Columnar method. A single set of books is maintained. In the final accounts, trading and profit-loss account, separate columns are prepared for each department. It is simpler, economical, and widely used. Allocation and apportionment of expenses. In departmental accounting, expenses must be divided between departments accurately. 1. Allocation. Direct expenses that belong to a specific department are charged directly to that department. Example: salaries of staff working only in one department. 2. Apportionment. Common expenses are distributed among all departments on a fair basis. Example: rent, electricity, and advertisement expenses. Basis of apportionment may include floor area, sales, number of employees, or value of assets. Preparation of departmental final accounts. 1. Departmental trading and profit-loss account shows gross profit and net profit earned by each department separately. 2. General profit-loss account. Common expenses and incomes, not allocated to departments, are transferred here to determine the overall net profit of the business. Advantages of departmental accounting. 1. Helps in evaluating the performance and profitability of each department. 2. Facilitates cost control by identifying high-cost areas. 3. Enables comparison between departments and motivates competition. 4. Aids in deciding whether to expand or discontinue a department. 5. Provides useful data for internal control and decision-making. Disadvantages of departmental accounting. 1. Time-consuming and involves additional work. 2. Requires careful allocation and apportionment of expenses. 3. Sometimes allocation bases can be subjective, leading to inaccurate results. Conclusion: departmental accounts are a useful tool for businesses with multiple departments. They help measure departmental efficiency, control costs, and guide managerial decisions, ensuring that each part of the business contributes effectively to the overall profitability. That is all about departmental accounts. If you have any doubt, feel free to ask in the comment section. Thank you.